Okay, evening everyone. Look, thanks for joining me this evening. What we're planning on covering here in a half an hour, and I'll go through an agenda with you guys. Firstly, my name is Sean, and I'm the director at SYS Mortgages. We're also joined by Aideen this evening. She's one of the senior mortgage brokers in SYS, and Aideen is here to help me with answering questions. And indeed, if you have any questions this evening as we go through the presentation, please pop them in the chat, and then Aideen will answer some as we go, and then some of the more interesting ones, or not, or maybe all of them, depending on how many questions, we'll answer right at the end in a Q&A. I've also got Keith Dunnan here with me this evening. He works as part of our financial planning in our sister company, SYS Financial, and Keith heads up the financial planning team there, and Keith's going to help us there when we get on to talking about mortgage protection, and Keith's got a couple of key points there. So again, if you have any questions around financial planning or anything around that as we go through it, please feel free to ask any questions, and we'll give you the best answers we can. We have a hell of a lot to get through, and I will try and get it done in a half an hour this evening. I'll tell you briefly who we are, for those of you who don't know who we are. Then we'll get on to the interesting stuff, i.e. mortgage rules, what first-time buyers, somebody trading up, and a lot of what we're going to go through is particular to people who are either switching, trading up, or first-time buyers. So it's all interesting stuff, hopefully. We'll go through the costs associated with a mortgage, not only your deposit, but actually looking at the other costs associated, and talk about some actually money-saving tips for you there. I'll give everybody an example of monthly repayments. So again, before you start looking for your property, you can actually get a budget in your own mind as to what a rate's doing out there. And we look at the mortgage journey itself, i.e. where do I start, where do I finish, and how long does the whole thing take? And then we go to the mortgage checklist, i.e. what are lenders looking for these days? What's the right thing to do when applying for a mortgage, and what can be some bumps in the road? And then, as I said, right at the end, we'll do some questions and answers. But feel free to ask any questions and put them in the chat section as we go. Now, I apologize if I go very quick on this, but there will be a recording sent out for anybody who wants to re-look at it. It will be up on YouTube, so you'll be able to look at it there. SYS Mortgages, we're a mortgage broker, and what a mortgage broker essentially is, it's somebody who works for you and not for the lender. Our job is to make sure that you're ready for a mortgage when we decide to put in a mortgage application. The advantage you get through a broker such as ourselves is you get choice rather than going to one lender and you just get that lender's products. We have offices in several locations in Ireland. We're backed up by a very large financial services company, and we do everything online, paperless, and that works very well. So we're a nationwide broker, and I'm pleased to say that we're one of only 32 brokers in the country who've got access to every lender and every rate. Okay, and there, a summary of us. We're free. We don't charge for our services unless it's a foreign exchange mortgage, but we're free for every other mortgage we do. So we don't charge. We get paid by the lender should a mortgage go through to completion. And as I said, that's a little bit about us. We have Google reviews and people seem to be happy with what we do. That's enough about us. I'm here to talk to you about mortgages tonight and how to prepare. Okay, if people wouldn't mind, just so we know where we're at this evening, I've got only two polls, and I'll only run them for a few minutes. So the first question there, if you wouldn't mind answering where you are in your journey at the moment, and literally give that 10 seconds. Cool. It just helps me to find out who the audience are, so we make sure we're talking to the right people. Cool. Great. Okay, look, I'll end that, and thanks for doing that for me. Cool. Great. Okay, let's crack into this. Okay, mortgage rules. Okay, there has been some changes in the last 18 months on mortgage rules. First-time buyers can now borrow up to 4 times income. And that changed from 3.5 times income. So you're getting more borrowing. So it's 4 times income, whether you're a single applicant or a joint applicant. So that's important. You changes to the first-time buyer, you can actually get also something called an exception. An exception to those rules means you can get up to 4.5 to 5 times income, depending on the strength of the application, i.e., how much you've got saved, how much you earn, what's happening in the background, i.e., have you got kids? Depends on your affordability. Okay, for public sector, though, and this is very important, anybody who's listening who's public sector tonight, we can look at future income. What that means is you're looking at your points up the scale. So one actual lender at the moment can go up to 5 points up the scale. So you can go a long way up and then multiply that by 4. If you're a second-time buyer, you can multiply it by 3.5. So that's the only rule that hasn't changed for second and subsequent buyers. So you can borrow 3.5 times. Second-time buyers, though, can now borrow 90%. What we call loan to value. So a very simple example, if you find a property for 100k, you can now borrow 90,000 euros towards that 100k. It used to be 80,000 euros towards that 100k. So again, they're trying to encourage that we're a bit more flexible now when we're looking at first and subsequent buyers. First home scheme is now available, and that was a scheme that was brought out under the Housing for All, and it's available for both new builds and self builds. And now it's just changed recently when the government made their new housing plan. It's now looking at derelict properties as well, that you can avail of the first home scheme. So it's a scheme from the government where they will give you up to 30% equity in the property. So they'll pay a 30% deposit, but you are giving up equity in the scheme. But please look it up. I could do a whole presentation on that alone. So the first home scheme is now available. Help to Buy scheme been very, very popular since 2015, and it's giving you back some of your tax receipts. And again, it's for first-time buyers, and we'll cover that. Certain other people are classed as first-time buyers now, and that'll come in a short while. But it's for first-time buyers who've paid tax over the last 4 years, and it pays you up to 30k by way of a gift from the taxman, by way of a deposit up to a maximum of 30k and up to a maximum of 10%, and it's capped at a rate of a purchase price of 500,000, i.e. 500,000 euros. It is available as well for self builds, that you can avail of that scheme as long as the final property value on your self build isn't in excess of 500k. But there are rules around it. Look up the Help to Buy scheme Ireland, because there is one in the UK, and they all come under the first home scheme. Okay, great. First time buyers, right. Are you a first time buyer? Right. As we said, you can borrow up to 90% of the purchase price. You can do 4 times individual or combined yearly salary, and that includes variable income, depending on how much variable income we can prove. So an example, a nurse basic salary plus night shift, Sunday allowance, that's variable income. We can include 100% of that depending on how long you've had it for. So, but you can look at 4 times individual combined salary. And if you're a nurse, you're on public sector, we can then go points up the scale and so on. We are achieving 5 times income for some people under the mortgage exception rules. That's something that goes outside central bank rules. Lenders don't have a lot of them, and not a lot of lenders are giving exceptions at the moment. We do have some available still. Yeah, rates are still good now at the moment compared, especially to rent. And rates have come down steadily over the last 18 months. And even a lender today, Moco, who's owned by an Austrian bank, has brought their rates down today. So your typical rates now, you should be paying between 3 and 4%. Hopefully nearer to 3%, because there are rates out there starting at 3%, green rates and everything else. You do, however, require a 10% deposit as a first time or a subsequent buyer. And that's what I'll cover off next. Where can the 10% deposit come from? You can get it from the Help to Buy scheme. So if you were lucky enough to find a property for 300k, a new build property, and you could avail of the full Help to Buy scheme, that will give you your full 30k deposit that ticks the lender's box. Most people have it for savings. You could have it for a mixture of savings and a gift from a relative. So the first home scheme, as I said, can give you up to 30% of a deposit. Be careful on the first home scheme. It's great to help people get in the ladder, because a lot of people are paying sky high rent and then they haven't got the deposit to put down towards a new property. So the 30% can come from a government backed scheme by lenders who actually have the first home scheme as part of their package. It does take an equity stake in your property, i.e., you own 70%, the government effectively owns 30%, and you have to give that money back at some point in time. There's no interest on that for until year 6, and then you start paying interest on the money the government gives you. Excellent scheme. A lot of people are availing of it. There's about 750 million the government have allocated to this scheme, but it is going fast and it is out there, so it's worth researching. And by all means, reach out to us, and we'll talk you through it free of charge anyway. But as I said, you need a 10% deposit. That's one box tick. So we've talked about income. So we all know you need 4 times income or 3.5 times income as a subsequent buyer. We know now about the deposit. You need 10% from somewhere. Big thing that people don't realize at the moment is something called repayment capacity. And that's what I want to cover off, because it's a very, very important part of applying for a mortgage. And repayment capacity is the proven ability to meet a mortgage repayment that is based on your financial track record. What that means is when you're going for a mortgage, and let's pretend the mortgage monthly payment is going to be €1,000. What a lender is looking for is, are you paying something today that you won't be paying when you turn the key in the property that is equivalent to €1,000? It does get a bit more confusing, but lenders look, for instance, for example, for rent. If you're paying €1,000 in rent, that ticks that box as long as you can prove the rent you've been paying. You might be living at home and you might be saving €1,000 a month. That ticks the box, so you've cleared your €1,000. You might have a car loan that's finishing before you move into the property, and it's €1,000 a month. That ticks the €1,000 a month box. So and it could be a combination of all three. Now, the great news is, if anybody is listening to see then who hasn't and says, "Oh my God, I've got 2 bits of good news. I haven't got 6 months repayment capacity." Lenders only look at 6 months, so you could start by talking to a broker today who tells you need to be saving €1,500 a month, or you need to be evidencing your rent. You could do that for the next 6 months, and you could be mortgage ready by next April. So the good news is it's a very short window of time that lenders look at, and they only go back over 6 months. And I'll be covering that off on the mortgage checklist in a short while. We talked about rent. If you are renting, please make it evident in your bank account. Even if you're paying cash on rent, try and take out your rent in one lump sum and mark it on your bank statement. There are lenders now, they're getting a little bit more flexible, where they'll take your rental agreement if you've got one. So look, there's several ways to look at it. I said there's 2 bits of good news. Lenders have gotten more flexible. I.e., newer money there, you'll see them on the right-hand side. They don't look for repayment capacity, believe it or not. So if somebody came to us in the morning, they had no repayment capacity, we could do a run-by via newer money. MoCo only look for 50% repayment capacity in certain circumstances. And then Haven, who are part of AIB, go completely mad and they look for more than 100% repayment capacity. So what I'm saying is, if you're talking to a broker, probably can get a fit for you. Now, newer money, the rates aren't as good as Bank of Ireland, so ideally you'd have repayment capacity. But there are different rules, so please look at it. Like, there's a couple of if there's any questions, just pop them up there in the chat, and then we'll answer them either at the end or as we go. So hopefully I'm covering this off okay. I know I'm trying to keep us to the time, so cool. A couple of rules there around if you're trading up, and this is interesting for first-time buyers as well when you're looking at down the line. So if you're trading up, the maximum you can apply for is 90% of the purchase price. The good news is, if you're selling an apartment to buy a house, the equity, i.e. the equity is the difference between what you owe on the property and what the property is worth. You can use that equity as your deposit for the new place. Your repayment capacity would probably be ticked off, a lot of it, by what you're paying into your paying your current lender at the moment. However, you might be looking to trade up and keep your existing primary residence. That's not a problem as long as you can rent out your existing property to cover the mortgage on it, plus a little bit on top to allow for rental voids. But you would need to have your deposit for from another source, i.e. savings and so on. There is a lender out there now, however, who will convert your existing property into a buy-to-let, and potentially, depending on the equity in it, you could take money out of your existing property and then go off and purchase your new property. But there's only one lender who's allowing that. But no, that's trading up. So there's all sorts of things you can do. Yeah, but the important thing is it's 3.5 times salary and 90% of the purchase price. You can use the equity, or you can keep your existing property and start building yourself a little property portfolio if you want. Okay, switching, very important. Whether you're a first-time buyer or whether you're whatever you are in the process, there will come a time when you might need to switch your current lender. And you've got choices to make when you first take out a mortgage. You can have a mortgage from 5 to 35 years. You can have a mortgage now up to age 80 if you want to go completely crazy. You then choose whether you want a variable rate type mortgage. Variable rate is, as it says, the rates can go up and down. Or what most people do is they choose a fixed rate when they first take out a mortgage for a period of time, typically 4 to 5 years. That seems to be where the best rates are lying at the moment for fixed rates. At the end of that fixed rate is where you might consider doing something called switching. And anybody who's got a current mortgage tonight and might be thinking about switching, there's a very good reason. People switch their mortgage to save. An example there, and it's a true example, original mortgage 250, current rate was 4.5, term remaining 25 years, monthly repayment was 1390. Switched them to a rate of 3% with PTSB. New monthly payment was 1186, so the monthly saving was €204. Total interest saved is 61,200. What the person actually went and did was they reduced their term to 20 years, so now they're saving 5 years on interest and on payments, and kept the payment the exact same. But switching is something everybody should consider at a point in time, and even talk about switching your car insurance and things like that. We're not going to do that tonight. Cool. Okay. Associated costs. You should look up this article. The lady's brilliant, Joanne Hunt in the Irish Times. I did an article there recently in the Irish Times, the hidden costs of buying your home and how to minimize them. If you look that up, you'd probably find the find the article on it, but it's the hidden costs of buying your home and how to minimize them. And there's some interesting costs in there, but we will cover those off this evening. So the costs associated with a mortgage. So we talked about your 10%. So we're all happy that we need to find 10%. Legal costs. These can vary hugely. And I've seen them all, 2,000, 6,000, depending on your solicitor and case complexity, and where the solicitor is. Now, my only advice on solicitors, and everybody's got a family friend who's a solicitor, is try and find a solicitor who specializes in house purchase. There are now popping up all over the country, and we recommend a few, and they seem to give you a fixed fee. So try and get a fixed fee. You shouldn't be really paying more than 2.5, 3K as a first-time buyer or a subsequent buyer on legal fees, but get a fixed fee and try and get a firm that specializes in mortgages, because then they're not going off to the High Court. It's not a one-person outfit and they go missing for 3 weeks. There's a big court case going on. You want somebody who get you into your house when you want to get into the house, and we'll talk about the actual mortgage journey in a second. Stamp duty. Nothing you can do about it. It's 1% that the government charges you, and that stamp duty is paid before you turn the key in the door. You give the money to your solicitor. So an example there, find a house for $500,000, stamp duty's 500. Yeah, it's 2% if you want to go crazy and buy a house above $1 million. And if you want to go completely crazy and buy a house for $2 million, you're going to pay 6% on £500,000. So 30K. So government goes mad. If you're the bigger house you buy, they want more money off you. Valuation fees. A tip here also. So valuation fee, it's going to be 150 to 250. That's a lender valuation. It's a very, very basic valuation where somebody goes out, a professional goes out and values the property you're buying. Now, if you find the property, don't go booking a valuation yourself. The lender will have a panel of valuers that they want to use. So you wait for the lender to make a call on that. They don't do anything fancy in that valuation. Literally, if they see a wall falling down, they'll call it out. But typically, if the house is okay, they'll just value it. And I don't see many properties getting down valued these days. So they'll just say, listen, you find a house for 300k, they'll tick the box, say, we think it's worth 300k, and we think you'll be able to live in it straight away. They will call out if it's derelict. They will call out if they don't think you can live in it. They will call out if you think you're paying too much for it. But I haven't seen that for many years now. Survey and snagging reports, two different things here. A survey, a lot of people go off and get an engineer's report done on a property. And that's okay for your older properties. For peace of mind, you don't need an engineer's report on a new build property. You'd probably have a snagging report done on a new build property, but not an engineer's report. And my advice really is to always talk to your broker to get advice, send the property link and so on. If a property is over 100 years old, you have to have an engineer's report on it. If you want peace of mind, you might have it done. But these reports are expensive. They're 500, 600, 700 euros. And a proper engineer goes in, tests for damp, looks in the roof to make sure there's no woodworm, looks at all different sort of things, and then may actually ask for more reports from other drain specialists and things. So again, happy to talk anybody through that. Snagging reports now are getting more of a thing, really. It's for a new build property where you pay somebody to go in before you sign contracts to make sure that the finish on the property is the finish you expected, to make sure there's no cracked tiles, make sure that the kitchen is the color you thought it was going to be, make sure there's running water and so on. So it's somebody goes in and snags. That's anything from 200 to 400 euros these days, but it is for new build properties. You typically don't do snagging on second-hand properties. Yeah. Property insurance, that's required and it is compulsory. And property insurance is anything from 300 to 600. Most people pay it annually, a bit like car insurance, and it puts the property back in a state of repair that it is before anything happened to it. It's important to have, even anyway, if it wasn't, it is compulsory, but it's very important to have, and it's very important to check for flood areas and things like that. So again, a tip for everyone is if you find a house that you think you'd like, send the property link through to your broker. And we can even check it out with insurance companies. There is a list of flood areas, because last thing you want to do is fall in love with a property and then you can't get a buildings insurance on it, and then we can't get a lender and so on and so on. So, but there are ways around flood insurance as well. Cool. Management fees, or I'd come back to mortgage protection because I'll invite Keith in a second. Management fees for apartments is really, be wary of that. If you're buying an apartment in an estate, there probably is management fees, and they're an annual fee you'll have to pay to the management company. So just take it into account when you find an apartment, just see what the management fees are. You have to pay them, but just make sure there's a management company and things like that. But again, broker will talk you through. Moving costs, anything from 400 to 2,000. The reason there's 2,800 in there, I moved home last October and I paid about 2,800. 1,000 of that was because the people who were buying my place couldn't complete in time. I had to put the removal people off, and they charged me 1,000 quid extra for the privilege. So it was not a happy camper, but hey, these things happen. So moving costs, do build it into your costs. Preferably move yourself, or get a load of mates with vans and things, and yeah, get yourself moved. Other extras, land registry fees, local property tax, potential repairs and upgrades. They're all. Your solicitor should take care of the land registry fees and the local property tax. I'll invite Keith in just while I have a drink of water to talk about mortgage protection just very briefly, because it is compulsory. I don't specialize in mortgage protection. You have to have mortgage protection. My only intake on mortgage protection is, and I see it almost on a daily basis, if you have any health issues in the background or anything like that, the lenders, they're very poor, and I don't mind putting this on video. They won't give you a mortgage typically if you can't get life cover. Sometimes they'll waive it, but I'm seeing that less and less regularly now. So it is compulsory. And maybe if I hand over to Keith, he can just talk you through the options, and then we'll go on to some very exciting stuff in a minute. We'll go through the mortgage journey and everything else. Okay, Keith.
Thanks very much, Sean. Good evening, everyone. Yeah, so look, I suppose mortgage protection, as Sean alluded to, is compulsory. So it is part of the process. And I think the important thing to understand, first of all, is what is mortgage protection? It's essentially a life policy that, God forbid, something happened yourself or your spouse, that there's a lump sum paid out that the bank gets to cover the mortgage. So individually, it could be a life policy or it could be a policy on yourself or your spouse. When it comes to the policy itself, the big thing is that it's convenient and efficient with regards to putting it in place. So it's all done in a timely manner that doesn't restrict or delay the process for you getting your mortgage. It's best in class that you're getting value for money. Sean has figures there, €15 to €150 dependent, but it's important to get the best value for money that you need, and it's suited to your needs. Your health circumstances could be something to look at, so it's important to take that into consideration. Where we kind of have a USP is we have an in-house planner. So one of my team works very closely with the likes of Sean and Aideen. They can understand and work in tandem with the process and be proactive with regards to putting the policy in place. Like Sean and Aideen as well, in their team in the mortgage side, we're agnostic. We go to the market and get the best structure for your needs, and then it's client focused at the end of the day. And just to leave people on a few different questions with regards to if you're looking to get mortgage protection or have it in place on an existing mortgage, some of the things to look at are: is it still aligned to the balance, the term, and the interest rates or your policy that you might have? The second thing is it dual or joint life? And the thing is, the market has shifted from joint life to dual life, and you can get two payouts for the price of one. And one of the last things then is we see a lot more of people cohabiting, and your mortgage protection policy needs to be set up correctly in order to minimize inheritance tax bills. So if you're a cohabiting couple, your mortgage protection needs to be set up a certain way to protect against any inheritance tax bill. If you're married, again, there's a certain way of putting that in place. But just to finish off, the mortgage protection is one area, and we're more than happy to support Sean and Nadine. But again, outside of that, there's a whole sphere of financial plannings that we're more than happy to help with everyone in their journey. So look, that's probably a whistle stop tour of it, Sean. So look, back over to yourself.
Brilliant. Thanks, Keith. Thanks. Okay, so look, that's the cost associated with a mortgage. Good tool for everyone here, and worth making note of these. There's not going to be a lot of different rates. Rates are going from 3% up to 4% at the moment. But to give yourself a good budget, and the reason I've got 100K here is, and take a snapshot of those figures is, if you're looking for a mortgage of 400K, just multiply their 385 by 4, and that'll give you monthly cost roughly. Now it does depend on the lender you go to, but it does give you some examples there. So just multiply that up, and then a good example. Say your budget is 4 times 100K. If that's 400,000, the way to work out your purchase price from that is divided by 90 and multiply by 100, and that'll give you your purchase price, so your purchasing power. So look, just monthly repayment examples there. Okay, mortgage journey. Where do I start? Right, I'll try and move this along. Approval in principle, the only place to start. And an approval in principle is an amount of money a lender is willing to lend you, and that approval in principle is normally in place for 6 months, so it gives you a chance to go out and find a property. And we'll go through in a second how you get an approval in principle. But it's the only place to start, because all auctioneers now, they won't take a bid off you unless you've got an approval in principle. Some people won't even leave you view properties. Certainly with new build properties, they won't secure the property unless you've got the approval in principle in place. So we've done a lot of hard work to get you an approval in principle. You'll have to do a lot of heavy lifting. I'll go through the documents around that in a second. Once you've got your approval in principle, you need to go shopping and secure a property and pay a refundable booking deposit. Don't get frightened when you bid on a property and you're successful and then the auctioneer asks you for 10K. Just make sure you get a receipt. That is fully refundable until a point in time, which I'll cover in a second. We spoke about the valuation. your safety net, i.e. a valuer goes in and actually values the property, and you know you're paying the right price for it, and there's nothing glaringly obvious. And then you might go off and get your engineer's report after that. You got your solicitor. We already spoke about solicitors, can be 2.5, 3K, so you're paying them a good lot of money. A solicitor is there as your essential part of the process. You have to have one. And what a solicitor does is make sure that the property you're buying, you can buy it, and make sure it's planning compliant, and make sure the person you're buying it off can sell it to you, and then make sure it goes in your name and the lender also. And they do that by way of contracts. As I said, pick a good solicitor. And once your solicitor has something called the contract, and they're happy with the contract of sale, they will invite you in to meet them. You will then meet them. You'll go through your mortgage offer typically with them. You'll pay over your deposit, i.e. you're up to your 10% deposit. That is the point of no return. The solicitor will send that 10% deposit off and the contract to the people you're buying off. And then that contract comes back, signed by the people you're buying off. Your mortgage offer is signed at that point. Mortgage offer, I've got it highlighted there. Very important, and very important to check it once and check it twice, because that's your contract with you and the lender. And whatever happens, as long as you keep up your mortgage payment, if the lender leaves the market, your monthly payment, if you've gone for a fixed rate, is set in stone. Yeah, and then you can switch it, as we said, 4 years down the line. But typically move in. How long does it take? Approvals in principle. If I went to New Money in the morning, I could probably get you an approval the same day. If I went to Bank of Ireland, it'd take a bit longer, about 2 weeks. So, but once you have your approval in principle, you have 6 months to find yourself a property. Once you find a property, things are moving quite quickly at the moment. Typically, if it's a second-hand property, you're looking at 2 to 4 months to complete on the purchase. If you're looking at a new build property, depending on where it is in the build stage, it could take ending up to 18 months, and then we need to factor a mortgage offer around that. Or the property could be built and you might move in a couple of months. So look, it's a moving thing. Make sure you enlist the help of a broker who can hold your hand through the process and make sure your approval moves with you. Cool. Last one, and then we go on to questions. Okay, mortgage checklist. When you're going for an approval in principle, a lender will ask you for these documents: 6 months bank statements, including any bank statements you've got. So if you've got 3 bank statements, you'll want 6 months of all. The great news is it's only 6 months. So if we spot anything in your 6 months bank statements, you can go away and repair it, and then we can make you look really glossy for the lender some point down the line. But they're typically looking in your bank statements: is your salary going in there? Do you pay rent from your bank statements? More importantly, are you gambling in your bank statements? Now, if you have the odd flutter, that's fine. If you're in and out of Paddy Power online daily, we might have an issue, and we might tell you stop for 6 months and then come back to us. But things like that, don't go into the red. And what I mean by red in your bank accounts is go overdrawn and get items returned. You're better off having an overdraft rather than having items returned. So get yourself an overdraft rather than going. A lender won't refuse your mortgage for having an overdraft. They might refuse your mortgage from having returned items. So very, very important. Latest employment details summary. And we normally ask for 3 years, because then we can take variable income over 3 years. You'll get that on my account in revenue. It replaced P60s. Last 3 months pay slips, 6 if you're paid fortnightly, 13 if you're paid weekly. Lenders want to see how much you're earning, and again, to take variable income, they want to match that up with your salary cert down the bottom there. A lender will fill out a salary cert for you, or your statement of earnings if you're public sector. It's just to prove you're full time in your employment and that you're not on probation. Last 3 months credit card statements, if you have any, and last 12 months loan account statements for all loans. Now, that list does vary from lender to lender. Some lenders, if it's on the credit bureau, they won't want to see loan statements or credit card statements. Some lenders, and we would advise you of that as we go. Credit bureau, it's important, if you get time, go onto the Central Credit Register. That's a free report, and you can do a credit report on yourself, because I've seen it in the past where people have had credit cards, they've forgotten to pay the stamp duty, and that credit card gets revoked. If we pre-warn a lender if there's anything in your past, we may still get you a mortgage. But lenders don't like surprises. And if you surprise a lender, they're more likely to decline you. So look, Central Credit Register, CCR report. It's free. Takes a little bit of effort, but it's free. So you might as well get one on yourself. See what people are saying about you. We need to know who you are, so we'd want a copy of your signed passport and driving license, and we'd have a look at you online to make sure it's really you. Copy of marriage cert if you're married. If bank statements do not have a current, so we can use those for your proof of address. Self-employed. If anybody listens self-employed tonight, we need a minimum of 2 years accounts filed and paid. Your Chapter 4s, your Form 11, and your tax clearance, or a letter from your accountant saying your taxes are up to date. And for self-bills, again, I could do a whole half hour on self-bills. We need costings. I can get you approval with costings and an OSI map from one lender, but it's a whole new ball game. So it's costings, OSI map, and all of the above. So look, that's the mortgage checklist, and that's what you need typically. We go through that with a fine-tooth comb before we go near a lender. And that's what we pride in ourselves. We won't put anybody into a lender unless we're pretty sure they'll get approved, and providing we've had all the information up front. Yeah, so it's so look, that's where we're at. One small poll for you guys, and then we'll go on to any questions that you may have, if you don't mind. Go back on that one. And just this one here for me, if you don't mind. Just if there's anything on that poll, just for 5 seconds. We'll take it from there. Cool. Okay. Look, I'll end that poll, and then maybe Aideen will have some questions. Cool. Thanks for those, guys. Look, I covered a hell of a lot, so, and I hope I didn't cover it too quickly. I'm trying to move this slide along now. There's a QR code there if anybody wants to. Hopefully it's working. It was working yesterday, and it takes you straight into our calendars. If not compulsory. Look, if you wanted to book a calendar appointment, you'd either be talking to me or one of our senior brokers like Aideen. And our initial chats, they take about 15 minutes. And believe it or not, within a 15 to 20-minute chat, we can give you a good gauge of how much a mortgage will cost you and what's the likelihood of you getting a mortgage, and answer all the questions. And we don't mind if that 15-minute chat takes a half an hour. Yeah, it's we're there for people. And remember, as I said, our service is free of charge. We don't charge, and you get massive choice to ourselves. There's hundreds of rates out there at the moment. Give you a good example. Bank of Ireland have 27 different rates. So depending on the energy rating in your property. So it's there's a hell of a lot to it. Was there any other questions, Aideen, that weren't answered, or is it Aideen there?
No, you covered them off in your slideshow. Someone was just asking, do mortgage brokers pay attention to your bank statements, what you're spending your money on? Everything else was answered.
We do. We almost have to be forensic accountants these days, which because the lenders do. And is it easier to get a mortgage now? Somebody asked me yesterday, is it easier to get a mortgage now than, and I've been doing mortgages for too long, 30 years. Is it easier to get a mortgage now than it was in 2017? It is, because there's more choice and there's more lenders, but they still all look, and it is probably the most important document is your bank statement and your savings statement, because that's what we learn a lot from. Yeah, cool. Any more questions, guys? Because if there isn't, you covered the one off about the car loan, did you? Yeah.
I think there's actually, Sean, I think I can see, I don't know if Aidy might be able to see it. There seems to be questions coming in just separately there in a different kind of a chat. Just
Or
down the
or,
bottom, I can just see him there coming through. I don't know,
or
Aidy, can you
yeah.
see that?
The Q&As. Yeah, I can see them here.
Yeah.
Yeah. Okay. We'll go through these. Any particular pros and cons to credit union mortgages? Yeah. Can you hear me answering these? I'll ask the questions so you can hear this, Keith, still, can you? Yeah. Cool. Any particular pros and cons to credit union mortgages? Look, the credit union, it's brilliant they're doing mortgages. The cons to it is they've got pretty good rates. They're starting now at 3.45 and they're going to cap at 4.4. But it is a variable type mortgage, so they're not currently offering fixed. So it's and there is a place for them. There is more choice out there. That's but yeah, look, it's great they're to the market and they're back. Yeah. If I buy a house worth 100K and there is 50K of work to do in it, can you apply for a 150K mortgage? If you buy a house for 100K, you can borrow 90K on that, and then you can borrow up to 90% of the 50K. So you could potentially borrow 135K of the 150K needed. Now, depending on the works, whether the lender will release the money for the work side of 50K on a drip as you do the works. So just be mindful, you have to do the works before you get the before you get the money. Yeah. I have life insurance, so does this mean I need both mortgage and life insurance or just the one overall? Sorry, probably silly. There's no such thing as silly question. The life cover, if you have life cover and it can be assigned to a mortgage and it is for the correct amount and the correct term, you can use your existing life cover. You can't use debt and service. You can't use a pension or anything like that. So there is specific types of life cover. And yes, you can use a whole of life policy. But again, we'd review that for you. Cian would review that and tell you what's it all about. But yeah, no, you can use it. How long does the mortgage process take for self bills? Great question. Once you've got your full planning, your full costings, your engineer on board, you're typically getting approved similar to a normal mortgage in 2 to 3 weeks. And then the drawdown depends on when your solicitor can sign off the first stage in the process. And then you start your drawdown. How long does the mortgage process take? You've got 2 years to build the property, and it is done in stages. So it's there's quite a bit more to doing a self-build, and I would recommend that you enlist the help of a broker to do it, because there'll be times when your solicitor is drawing it down. There's normally 4 to 5 stages to drawing it down. So there you go. Sorry, I mean mortgage protection. Hopefully I answered that mortgage protection question anyway. Any other questions in the Q&A section, guys? No, I think I've answered them all there. Cool.
That's all they were, Sean.
Yeah, brilliant. Okay, look, thanks ever so much, guys. Hopefully you found this evening really useful. As I said, we will send out a link to the recording, and then we can we can actually take it from there. Okay, thanks ever so much. All right, cool. Thanks,
Bye-bye.
guys. Thanks. Bye-bye. And I've to stop this and end.